our next speaker is Christy, who works for Kova, co-founder and CEO. Welcome to the stage.
Thanks, James. Thanks for the warm welcome, everybody. But actually today, what I'm going to be talking with you about is your tax. And just so you know, I'm not from the ATO, and I'm not actually a tax agent either. But what I am is an engineer, and I specialize in tax technology. And like you, maybe at one point in time, we all sat down and had a look at our taxes. And we maybe asked a question, something like this. And the question that we're really asking is, how do I guess what my tax number is? I realize, how difficult, how time-consuming, and how complicated it can be to calculate your tax. And as an engineer, I thought to myself, that's a problem that I can really solve. So I set out to eliminate tax for all cryptocurrency investors across Australia. But then I talked to my team at Kova, and I talked to our tax partner, and she told me, we can't really eliminate tax, but we can automate it. And that's really what we've set out to do at Kova. So we've built a number of tools to help you, digital currency investors, to calculate their actual tax that they owe, so they don't pay any more than they need to. So my name's Christy. I'm co-founder of Kova. We're an accounting firm that specializes in helping businesses, individuals, and SMSFs in the financial technology and digital assets sector. And today I'm going to talk to you a little bit about your tax, a little bit about technology as well, and something that I'm really excited to talk about is your SMSFs. So something maybe you haven't been thinking about, but it is possible to acquire crypto in your SMSF, as well as a whole range of other alternative investments. So how did we get to this point? 10 years ago, it was really difficult to invest in digital currencies. It was really restricted to a very small minority of people who understood the technology side and had that competence to be able to acquire it. But not only that, you also had to have the really long-range foresight to be able to understand that this was going to be a very valuable asset in the future that a lot of people were going to put value into. So it wasn't easy, but it's 10 years on, and it has been quite a while, and the landscape has changed quite a lot. And a lot of people now know about Bitcoin, and I know a lot about other digital assets as well. And even the ATO knows about digital assets. So in the ATO's own estimate, up to 1 million Australians in Australia are invested in cryptocurrencies of some form, such as Bitcoin or other alternative assets. So that's, consider there's only 25 million people in Australia. That's almost 4% of Australia's population has some exposure to digital assets. And that's in 10 years. I just imagine what it's going to be like in another 10 years' time and what this number is going to look like. As the space continues to legitimize, we might see more and more managed funds, super funds even, retail funds getting into this space to get at least some exposure to digital assets in general. So your SMSF can also invest in cryptocurrency. I know maybe you haven't thought about it, but it is possible. And not only can your SMSF invest in cryptocurrency, but a whole range of other alternative investment types as well, including gold. In fact, it became so popular for SMSFs to invest in digital assets, the ATO's even added a line item in your tax return for your SMSF entity. This is a specific spot exclusive for cryptocurrencies where you declare how many cryptocurrency assets you hold in your SMSF at the end of the year. So, the ATO is taking it seriously because it is a serious asset class that they expect in the future. And, more SMSFs, SMSF trustees and managers are looking at digital assets as a way to diversify their portfolio and get some exposure to that asset class for a whole range of different reasons. So crypto is more than just an investment, and this is a really important thing to keep in mind. crypto has a transactional nature as well, where people are using it in some circumstances for day-to-day personal use transactions. So this could be purchasing coffee, buying airplane tickets, booking hotels. There's a whole range of different point-of-sale systems which are going around. I'm from Brisbane. There's a couple of companies doing things in that area up there. If you fly into Brisbane Airport, you'll see just how many of the stores in that airport are accepting digital currencies. I'm not saying that everyone's using them, but it does exist. And the analogy I like to use for this is you can imagine walking into your local coffee shop, pulling out your BHP share certificates and asking for 2 or 3 coffees. It's not really something that has ever really been done before, but that's the analogy for digital assets because they are treated as an investment. And this is where the tax implications come in. Because they're treated as an investment item by the ATO, you need to understand what the change in the value is when you dispose from when you first acquired. So there is possible that you can have this personal use asset exemption, which the previous presenter talked about a little bit, where you can exclude your capital gains if it genuinely is a personal use asset. There's a lot of restrictions on using that, and everyone did think it was a sort of get out of jail free card in terms of tax, but it has turned out to be not quite that case. But it is possible to do, and the most important thing to keep in mind if you do intend to use Bitcoin or other digital assets for personal use is always be keeping your records as well. So if you do purchase coffee or hotels or anything like that, you need to keep that tax invoice because that's going to help you substantiate your position that you really did purchase this for personal use. The other really important thing is if you do want to go down this path of using personal use as well as your investments is to keep those two clearly separated. So you might have $100,000, $200,000 of Bitcoin sitting somewhere, but you shouldn't be tapping into that to use for personal use. You need to hold those somewhere else, that they're clearly separated so there can be no confusion. As an accounting firm, we often see people at the beginning of the journey, but also at the end of the journey. And we like to get involved as early as possible to make sure that you structure and set up your investments with the best approach that you possibly can. So I always like to use this sort of 4-step program. But one is the first thing you want to do is always know what your goals are in getting into this space and into this investment class. So do you want to speculate on future price rise? Are you looking to diversify your existing portfolio of investments? Maybe you're looking for that ultimate security in your wealth and knowledge that only you possess it and no one can take it away from you. There can be a lot of different reasons that people get involved, but if you know what your reason is and you set that down, it's going to mean that we can take a better approach with all the professionals that you engage with, in how to secure and set up that investment, what may be custody solution that you'll use or if you'll use it for yourself, how you would structure that investment from a tax or a legal perspective as well. So the thing to keep in mind is understand your goals getting in, and then we can obviously do the best thing for you. And of course, during that process, you want to think about who your partners are in going down that path. So if you have an SMSF in particular, maybe you already have a financial planner or a wealth manager or a financial advisor, but you want to talk to them to see if they understand how digital assets work and if they're familiar enough with it to give you the proper advice that you need. And it's not just your financial planners, but maybe your legal professionals that you work with, or your tax accountant or agent, or anyone else that you're working with. And if someone tells you that that's really risky or they don't understand it, you shouldn't be doing it, it's probably a really good sign that they don't understand space very well. And this is a very common thing that we see. And of course, in a constantly evolving space like the digital asset space and cryptocurrencies, everything is evolving very quickly. We don't know what the future will look like in that next 10 years. So it's always good to keep on top of what you're doing, keep up to date with the latest news and information which is coming in. And that's to keep your investments safe for the future because we just don't know what's going to happen. So your SMSF can invest in crypto too. And it's not just for crypto. You can invest in a whole range of different alternative investments. SMSF in Australia is actually a very flexible superannuation vehicle. This is designed for you to save and invest for your retirement. Just in general, investments are possible provided a few key criteria are met. Firstly, the investment needs to be allowed for in your SMSF trust deed. So if you have an SMSF, you can open up your trust deed, have a look at it, and see if you are going to be allowed to invest in cryptocurrencies under there. And if it doesn't, you may need to get that amended. Or if you're setting up a new SMSF, there's really no reason that it shouldn't be explicitly stated in there. And any other alternative investments that you might be thinking about should be going into that trust deed. The next part is that it has to be allowed by your investment strategy adopted by the trustees. So, cryptocurrency is considered to be quite high risk. It has to be suitable for all the members of your SMSF funds. Of course, you can't purchase from a related party, so you can't purchase from your family or anyone else or members of the SMSF. You need to make sure you're purchasing it from third party. And it has to always, anything to do with your SMSF needs to meet the sole purpose test, which means all of the fun that you get to have with those assets is sort of, you get to save that until you retire. Of course, investing in SMSFs, you need to make sure you're partnering with the right exchanges or brokerages or services. It's really important that they have really strong record keeping. That's something that's really critical for SMSFs. Otherwise, you're just going to have a lot of trouble to get through your accounting and tax at the end of the tax year, especially when you sort of work with your auditor or your tax accountant's working with your auditor. You need to be really on top of that record keeping or you're going to have a lot of headache. But it's good to know that a lot of the Australian exchanges in particular, and I always recommend that you engage with Australian Exchange, they're a little bit more on top of that because obviously they're based here domestically. So what's possible in terms of alternatives? Well, we have what I call the conventional alternatives. If you talk to your financial planner or wealth manager, they might allocate you a sort of portfolio with some of these alternatives in there. So these are, private equity investments, maybe invest in some sort of hedge funds and possibly gold or other commodities. So, I think the industry is relatively understanding of where these fit into a sort of balanced or diversified portfolio. But we also have some more alternatives. And these are things you maybe haven't been thinking about for your SMSF, but are also possible. So there's some really great tax incentives around early stage innovation companies, or ESICs, as well as early stage venture capital limited partnerships. I know that one's a mouthful, but this is a really popular tax structure that a lot of VC or investment funds will adopt because of the tax incentives around using those. So you may actually already have exposure to these through your superannuation, even within your retail or industry super funds. But it is also possible to be investing these directly under your SMSF. Of course, these tax incentives are actually really fantastic. Up to a certain limit, you will pay basically no tax. But the reason is because they're considered to be very high risk. And that's always obviously something to keep in mind when you're talking about your SMSFs. And if you want to look at some alternative financial products as well, under your SMSF, you can't really borrow conventionally. You can set up a limited recourse borrowing arrangement, which is popular for purchasing direct property in Australia. But it is possible to look at some financial products if you're really looking for that leverage to get that leverage effect. So one possible way to do that would be to purchase CFDs or contracts for difference. And when I say that, I mean that's a very high risk product, and I'm not saying that this is suitable for you or for anyone, but it is something which is possible under your SMSF. And it's just to get your brain sort of thinking about what sort of alternatives you could invest in. So just remember, I'm definitely not saying you should invest in these. Don't be that person who sort of goes out and starts, puts all your money into high risk Bitcoin CFDs under your SMSF, because this is probably going to be a terrible idea. But it is something that you can keep in mind that is possible. And it's really about the flexibility of an SMSF. Then we get into some really interesting investments that you can do under an SMSF. These are collectibles. So collectibles are really good post-retirement fun, of course. Under an SMSF, all your fun and excitement and benefit from these investments is when you get to save that until you retire. And you also have to keep in mind with collectibles that you can't store them in your private residence or any related party to your private residence. So maybe you can have them, but you won't be able to put them in a display case inside your home or something like that. The other important thing is you always need to get insurance on those assets, and that can be something to keep in mind if we'll look at some of these. They may not be the easiest thing to get insurance for, or they may require a specialised insurance policy. And you have to document the decision of where to store the asset. And of course, the sole purpose test always needs to be met. You have to save all your fun for your retirement, but that's when you really get to enjoy it. So what's possible? When we talk about collectibles, maybe some easy ones which come to mind. Rare coins. You can have a rare coin collection, hold that under your SMSF. That's not a problem as long as you meet those requirements. That could also be gold coins. Gold itself, if you're holding it like in a bullion form, wouldn't be considered collectible, but that's also possible. We also have art collections, another popular staple for SMSFs. A good one for this is you can lease out that artwork to a gallery or a corporate office and at the same time generate income for your SMSF, and you can also satisfy those storage requirements that it's not stored in your private residence. We also have wine collections, so if you're a little bit of a connoisseur, you can put those under your SMSF. Can't really do much with it, but when you finally retire, you'll be able to crack a few open. Classic cars, if you've always wanted that red Porsche, that's possible. You can put that under the SMSF as well, but once again, you're not going to be able to drive that until you retire. Luxury yacht. That's right, it's not just cars, but boats as well are considered collectibles. This is technically possible. Technically possible. And finally, for sort of the all-time Australian classic SMSF example is racing horse. Yes, it is technically possible to hold racing horse under your SMSF as well. This one's not a collectible, but it is another investment type that you could have. So yeah, I hope you sort of have a little bit of an idea. These are a little bit of fun examples. They're really not going to suit a lot of people, but if you have something that the trustees or you have a lot of experience in, maybe there's some options there if you think it suits your members of your funds. It is possible to set these things up. They're not as well supported by the industry, but if you engage with a good tax accountant, SMSF, it is possible to do something. So what has the ATO been up to? We heard a little bit before, and might just go over that again. The guidelines around cryptocurrency have been released. It's not a complete Wild West anymore. We do have a pretty good understanding of how those cryptocurrency is treated for tax. And the ATO is onto it, and they have released their data matching program as well, so they will be pulling all of this data from different exchanges in Australia, something to keep in mind as well. Everyone maybe thought that it was a tax-free asset at one point in the past, but it's really not the case. We also think it's likely that the regulators in Australia, will be taking advantage of some of these commercially available on an international level blockchain analysis, forensic tools for tracking transactions, performing audit procedures if needed. So once again, it's always important, continue to embrace change. Crypto doesn't sleep, it's a 24-hour market. Your approach to investments and trading is going to be different to this. It's fundamentally going to be different. There's a lot of new projects due to the global nature, the capital raising opportunities as well. So stay informed. Think about what news sources you want to consume and where you're going to get your information from, that it's reliable. And with all things, with more data and knowledge, more opportunities come. So feel free to reach out anytime if you have any questions. I've got a lot of time to talk.
Any questions?
Any questions? Yeah.
We've got a mic coming, if you like.
We do have SMSF and we are investing in cryptocurrencies. So we do have our private keys on Ledger Nano. What is the format of holding, what's that called? Holding statement that would be acceptable by ATO?
In terms of like the transactions that you're placing.
Can we actually...
In terms of the record keeping for your SMSF?
Yes, so they're requesting that statement, a holding statement. Mm-hmm. Is it possible to just give them a screenshot of that Ledger Nano can give us?
Yeah, it depends a little bit on your, it's going to depend a little bit on your auditor. They need to be sort of satisfied that everything's being conducted correctly under your SMSF. I would say the best sort of example, you can look at what sort of statements you receive from your share trading account, or where from a managed fund or something like that. So it's really going to be, it should be a full statement, which is considered to be a tax invoice, showing the details of where you've been purchasing from. Each transaction, outlines showing what you purchased from, how much, the name of your SMSF on that statement. So,
hi Nick, it's Michael here. I have a quick question for you, which is also a curly one. You'd expect nothing less from a lawyer. CryptoKitties, a lovely collectible, which is digital. Let's say I own CryptoKitties, which I do, and let's say some of them are in my SMSF, which I don't know. Am I not allowed to print out a picture of my CryptoKitty and put it on the wall? Or is that going to violate the display in the house rule? Similarly, I mean, maybe the other analogy is if you have artwork, you can take a picture of the artwork and put the picture of the artwork on while the artwork itself is somewhere else.
yeah, I think that's a really good question. I mean, there's a lot of these unknowns in this space at the moment, and we're really not going to know until some brave, endeavoring souls such as yourself, take the plunge, put that picture on the wall, and then post it to the ATO. So let me know how you go, and we'll find out.
So usually if we trade or acquire crypto on an exchange, we usually have statements to show that the SMSF is owning the crypto. But if we don't trust the exchange, we want to transfer all the crypto to our own we use our own private key. Then how do we prove that the SMSF is still owning those crypto? If it's not on the exchange, then there will be no statement.
Sure. So the sort of, what we see from the majority of SMSF operators at the moment is that they're still a little bit conservative around that point. So they are using the digital currency exchanges or platforms to store as well. And that's a really obvious way to meet the sole purpose test and have it secured in an external location. So it probably is possible also you can hold it on your own private wallet. You just need to talk to your auditor and make sure they're satisfied with that procedure as well. That's really the most important thing.
I'm just going to tack on to the back of that because I think I have a bit of an answer for it. But if you do purchase a cold storage hardware wallet, it's imperative that where you purchase it from, that you make that purchase in the name of your self-managed super fund. So self-plug, but I sell cold storage hardware wallets, and I'll be speaking about them later today. You can just contact us, and we can issue an invoice out directly to your self-managed super fund. So that is your proof to your auditor to say that indeed this private key, which was derived from this product, was purchased directly in the name of my self-managed super fund.
Yeah, absolutely. I mean, it's all about building that substantiation of the fact that you are acquiring assets for the benefit of the members of your fund. They're being acquired by the SMSF. There's, technically, whatever you're doing, it might be okay, but you also need to back that up. And that's really what it is, putting that paper trail in place.
Just on that too, is it okay to actually use the money from the self-managed super fund? I know it's contradictory, but to actually pay for these assets and
Yeah, absolutely. I mean, if you have cash in your SMSF and you want to acquire crypto, you can definitely acquire crypto.
I mean, all these third-party tools and services that are provided, because I mean, I know it's diluting your investment, but if you're not using your personal funds, you're using this self-managed super funds.
Yeah, sure. I mean, that's used to store and secure that asset. That's fine.
Wonderful. Super interesting. I think it's like you've got to get it right to start with and grow. Thank you, Nick.
Thanks, everyone.
Fantastic. Take that off you as well. Yeah, cool.